Hey guys, welcome to another episode of Invest Power series today. So with the introduction of comprehensive credit reporting, what we call CCR, and I've done another video earlier this year about this. I'll put the link down there in case that you haven't seen it. Basically, it's now getting adopted more and more by lenders. So what you need to be mindful with the new CCR regime and how it impacts you is that it does not only record bad credit ratings or, like for example, an overdue default or anything like that, but it also now records your positive credit ratings as well. So that could be a plus. But in general, the default and all those negative credit rating is still have a big impact in terms of your application for a home loan or any kind of finance. So I thought today it's still good to recap a little bit upon the basis of how you should be maintaining your credit score. So the first point, and it's a very easy point, is make sure that you actually pay your bill on the time. So I think that's a very easy things to do, but at the same time, with all the busy life schedules that we all have, it can be overlooked very easily as well. So, if you got automatic direct debits, that kind of facility set up, make sure there's enough money in the account that you're using just to ensure that the repayment doesn't get rejected or bounced because of the fact that there isn't enough adequate money in that account. So there's two aspects of it. One is you want to make sure that the bill is paid on time, and that can be solved by a direct debit of some sort, like I mentioned before. Or two, you just put in your calendar or some sort of notification when the bill is due. Like I personally do that. I don't have automatic direct debit set up, but what I do is when I receive a bill, I actually just manually punch it in to say, this is the day that I want to pay this bill, and then when it comes up on my calendar, when it gives me a notification, then that's when I actually make that transfer and get that bill paid. If you're someone who does automatic direct debits, then of course that's going to save you that problem. And number two, which just to make sure that it does not, you've got adequate money in there so it doesn't get rejected or declined, because every time when you get rejected and declined, one, there's a dishonor fee which the bank may charge you because your balance has fallen below zero, and two, obviously that could, if you keep dragging it out without notifying, or without resolving it, that could be an issue on your credit rating or credit report later on. So keep it simple, whatever that works for you, as long as you've got adequate money in the savings account or whatever account that you're using, plus that set up a direct debit schedule, that's one of the easiest way to maintain a good credit rating. Tip number two, don't go apply all these fancy credit card applications or whatsoever. I know that some people have that tendency to, but that's actually the quickest way to drop your credit score. Just so that, I know some of my clients, they do obviously apply for credit cards in order to get frequent flyer points, and I know there's a lot of promotions going on just to get customers, for those lenders to get customers. But keep that in mind, that's actually every time when you do a credit card application, that gets a record on the credit, on your credit score, on your credit record as well. Your credit score, whenever it's a hit, the credit score goes down. So imagine that, say for example, the credit score starts at 1,000, and then you keep having to apply different credit cards because you want to be able to accumulate that frequent flyer points for free. And all of a sudden it could drop from 1,000 to 950 to 900 to 850, especially in the short period of time. If you have multiple hits, that's going to kill your credit score the quickest. So you just need to make sure that you keep an eye out in terms of what you actually need. Don't let these small things that you want to get in a short period of time ruin your long-term credit score rating, so that when it comes to next time when you do want to buy your own home, for example, and you get a decline from the lender, that's when unfortunately probably a bit too late. So just want everyone to be aware of that. So make sure that you don't apply too many credit finance related stuff in a short period of time. So that's the two quick tips about maintaining your credit score. So don't forget, moving forward, any kind of finance product, for example, your home loan, your personal loan, car loan, credit card, etc., all these things is going to have a hard record on your credit score or your credit report. And that goes on and stays on there for a period of time. So when you do your next application of any sort, for example, as a home loan, lenders now with the CCR introduced will actually pull up and see what your record is like. And I think at some point in time, if not already, they will obviously use your credit report to classify whether you are credit worthy or not. In other words, are you someone who keeps shopping around for credit? Because a lot of lenders may not necessarily have the appetite to actually take customers on with a low credit score. So you do need to actually protect your own credit score in order to be future-proof for any kind of finance product moving forward. So keep that in mind, and I hope you learned something out of this video. If you do, don't forget to give us a thumbs up, subscribe to our channel, or just put a comment down there. Let me know what you like about it. Let me know what else you would like to find out. Otherwise, I will see you again in next week's Invest Power episode.